Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we are going to be talking about the top renewable energy stocks to buy. I hope you guys enjoy it, and if you guys get anything in value, make sure you guys hit that like button and subscribe to the channel. Also, if you guys want to learn how to properly invest in the stock market, make sure you guys go ahead and check out my course. It will be the first link down below. It's only $5, but you guys will definitely get something in value out of it. It's worth the $5. You guys will have access to the group chat. You'll have access to hours of lectures. You will have quizzes and pretty much everything that you guys will need for investing in the stock market we cover in the course. So first link down below, at least check it out. So now let's jump into it, roll the intro. Let's go. Bam. So when investing into renewable energy stocks, honestly, these are going to be high growth stocks. So it's always smart to have a nice solid base of ETFs, bonds, or even blue chip stocks to kind of act as your defense in your portfolio, because these stocks carry risk, more risk than traditional stocks. So starting off with number one, we have Solar Edge, ticker symbol SEDG. You guys can see that this stock does have some beautiful growth here, hit highs at around 317. You know, it was just a little overvalued and now is coming in contact with these moving average lines. I do think it's going to eventually find some support in between 255 and 225. There's going to be some support here in there. The reason why is because this old resistance right here is going to turn into new support for the stock. So I do think it's just a matter of time whether this moving average line uses some support or this price point for support. I do think this stock does carry a ton of long-term potential. The overall price to earnings is a little high at around 81. And I completely understand with a lot of value investors are saying right now at this video, they're saying, Carter, why would you invest in a company that has a price to earnings at 81? Well, let me just give you guys this little fact. I always say it in my videos because it's very important. When Amazon was trading for around $700. They had a price to earnings at around $3,200. So $3,200 was Amazon's price to earnings. Now, looking back, it would have been foolish not to invest in Amazon at $700. So it's all about perspective and understanding there's more risk. But overall, I do think the stock does carry a ton of long-term potential with growing revenue, less debt, and obviously in one of the best sectors out there. Moving on to stock number two, we have ticker symbol REGI. This one has a very strong price to earnings at 6, which is great. You know, I always like to look at undervalued stocks that have a price to earnings under about 25. And this one definitely falls way below it, so that's always great. Also, increasing revenue, a market cap around $2 billion, so that could definitely grow easily. If it hit a market valuation at $4 billion, you're almost doubling your money. So that's great. And I do think it's just a matter of time because this is one of the best growing sectors right now, and the company is performing very well. Obviously, there's some resistance here at 65. Selling off here to 57. Do I think it's going to continue to fall? I really think it's probably going to fall to at least 51 to 49. There's going to find some support in that zone. If it breaks that, then it's going to go down to about 43. And I do think that's going to be a very undervalued price point. So my buy price point would be right around 50. I think that would be a fair buy. Definitely carries a ton of potential. Same with the other one. This one does have great earnings, great revenue, and overall has a price to earnings at 6. So that's very undervalued in my opinion. Now, moving on to the next one here, we do have Plug Power. You guys can see all the way back in the day, this stock was killing it, sold off majorly, but now recently you guys can see this explosion in buying pressure, which is overall very good to see because this company is working with a lot of other companies to get hydrogen fuel cell trucks and cars and a whole bunch of other things. They're really going to try to build an infrastructure for hydrogen-based vehicles. And I think that's a cool little sector here. Obviously, this stock does carry a lot of risk, but you guys can see it has had some very nice growth here. Selling off here to this old 9 moving average line, and you guys can see that every time it comes in contact with it, we get buying pressure. So now it's coming in contact with it again. So if history repeats itself, we could get some more buying pressure for a possible little swing trade in there. But overall, this one does carry a ton of long-term potential here. Moving on to the next one, here we have ticker symbol JKS. Now this one here, you guys can see it did have some old resistance here at around 34, broke out of that recently and hit highs at 90, sold off to 64. It was just very overvalued on the RSI and overvalued in general. But this one still has a price to earnings rated at 16.5. So obviously that's still not even that overvalued. You know, some people would say it is, but I don't. I consider stocks over 25 or 35 to be more growth and more risky. But this one still carries a ton of long-term potential with a market cap rate at 16.5 billion. I think this stock does carry a ton of short-term and long-term potential. Yes, I do think we'll probably get some sell-off here to about 55. But if you guys are long-term believers in renewable energy, I definitely think this is going to be one of the front runners in the sector here. Now, moving on to the last and final stock here, we have ticker symbol Csiq. This is also known as Canadian Solar. Now, looking at this stock here, you guys can see 2020 performed very well for this stock. But overall, right now, it is going to have some hard time breaking over this $40 mark. The reason why is because that is previous resistance. So what that means is every time that this stock has came in contact with these price points, it's had a very hard time breaking above it. And I do think it's just a matter of time before we get a break of this price at around 41 to 47. I think once we get a breakout of that, this will get a lot of investors involved and they will say, okay, well, it's finally out of that zone and we could easily get a run up to about $51 to $55 per share. Overall, guys, these are going to be some of the top renewable energy companies out there. And this one here, I forgot to mention, it does have a price to earnings right at 9.3. So it's still not even that overvalued, not overvalued at all. And I do think this stock could definitely grow in the future here. And all of these stocks are in one of the best sectors out there. I think people are going to get more and more dependable on renewable energy, solar stocks, hydrogen stocks. I think it's just a matter of time before some of these stocks just take off. So I hope you guys enjoyed the episode. And if you did, make sure you guys like the video. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and stay safe out there.